What I'm going to teach you in this video has single-handedly saved me hundreds of thousands of dollars over my 5-year trading career, and it's quite literally the reason I'm a profitable trader today. This rule is unbelievably simple. However, 90% of traders don't apply it, and in fact, they do the exact opposite, which destroys their trading. This is something that you can immediately apply in your trading today by the end of this video, so you can increase your trading results by 20, 30, even 50% by the end of this year. I don't want to waste your time. This can genuinely impact your trading performance right now. So make sure you watch until the end of this video and let's hop right into it. If you're wondering why you should even listen to me in the first place, I like to be as transparent as possible. This is my Charles Schwab brokerage account performance. And over the last 7 to 8 months, since November 1st of 2024, I've made a little bit over $445,000 in trading profits, which is a cumulative rate of return of just over 250%. And these are my results considering I barely traded in June and the start of July because I was actually on vacation. I went to Barcelona, Portugal, Amsterdam, and London. So I took some time off from trading. And a lot of you guys are going to be like, oh, this is a screenshot. You know, can you refresh the screen? Happy to do that. So if I refresh my brokerage account and I go to November 1st, of 2024 to July 18th, as you can see, there's the $445,000. I've been day trading for 5 years. My father is the one who taught me, and I believe transparency is king. I like to be real, and I like to show you that I actually make money with everything I'm going to be teaching you in my videos. So when my father began mentoring me 5 years ago on how to trade, this was quite literally the first thing that he taught me. He told me that this should be the backbone behind my trading, and that's exactly what it is today. And this is the reason I'm a successful trader today. And this is more than just a rule. This is a mindset. And a lot of you guys watching this video may listen to this video and kind of blow past it, kind of, oh, whatever, yeah, I know that, but you need to take this to heart. You need to instill this way of thinking into your trading and into your analysis, and I guarantee you it's going to end up making you more money. And this rule is incredibly simple. When in doubt, lower your risk, right? It's not sexy, it's not this crazy new indicator, but whenever you are feeling uncertainty, stress, high emotions, lack of confidence, whenever you're feeling anything that is negative in your trading, you need to lower your risk. When in doubt, just lower your risk, because 80% of your trading success isn't going to come from price action or knowing the right indicators or knowing how to read patterns. It's going to come from your ability to handle your emotions, handle your psychology, and of course, manage your risk. And your emotions and your psychology are very directly correlated with your risk. So if you are feeling emotional, if you're feeling anything that is remotely negative, you're starting to feel doubt, you need to lower your risk. And this has saved me so much money in my career, having this risk management type of mindset where I go into trading, I go into every setup that I take. In my mind, I'm not thinking, oh, how much am I going to make off this setup? Oh, I might make 1,000 to 2,000 and perfect. That's going to put me up 10K in the week. Amazing. No, when I go into a setup, I'm thinking, what is my downside here? Like if this thing goes against me and hits my stop, how much am I going to lose? How volatile is this stock? Is there a high probability this stock is going to actually blow past my stop and I'm going to lose more money? I always think of the downside first. I always try to protect my capital. And that's what you need to understand as a trader. Your priority isn't to make money as a trader. Your first priority is to preserve the capital in your account, capital preservation. Your second priority is to make money on that capital, to make money on the, capital you have in your account. That's your second priority. First is capital preservation. And most traders, unfortunately, don't have this mindset. Most traders don't really care about their bottom line or their downside. They just care about making money. They just care about quitting their job, living this life of freedom. And yeah, those are some of the best perks when it comes to trading, but you'll never realize them unless you adopt this risk management mindset. And there's a very common cycle that most traders go through here. And I kind of drew up a little rough representation here, but a lot of times a trader will make a mistake. Maybe it's an honest mistake. Maybe you under-risked on a trade, or you over-risked on a trade, or you messed up your management, or you took the wrong trade, maybe you FOMO'd in, whatever. You make a mistake. What does that lead to a lot of the times? An emotional crash out, right? And guys, we are not robots, right? Like, I hate this advice that you constantly hear on the internet that's like, oh, if you're a trader, you have to trade like a robot. You have to trade like an algorithm. Bro, we are human beings. We feel emotions. Unless you're like a psychopath, you feel emotions. And especially in trading, those emotions are strong. They're almost violent, where a lot of the times we sometimes feel like completely different people when we trade. Like, we go into the trading day feeling composed, feeling good, ready to follow our plan. And then as soon as the market opens and you begin trading, right, things happen, prices move, you lose money, you make money, and that changes your psychology, changes your emotions. And next thing you know, right, if you make a bad mistake or two, you're having a full-on crash out. You're getting emotional. You're starting to sweat. You have that psychological pressure, right? And this happens to a lot of traders. Maybe it doesn't happen to you every day, but maybe let's say once or twice a month, you have this sort of emotional crash out. Now, my biggest suggestion, honestly, is to just step away from your desk. But that's hard for a lot of people, right? Let's be real. It's going to be difficult for a lot of you guys to step away from your desk. But the least you can do is decrease your risk. But unfortunately, what most people end up doing is they have this crash out, right? And they're like, oh my God, I have to make back the money that I just lost. Oh, I was up 1,000, now I'm only up 200. I have to make that back, right? What do? They increase their risk. And as soon as they increase their risk, they have this mindset of, I need to make money, right? It's ultimately greed. That's what's causing this. You're increasing your risk because of greed. And greed is what's stopping you from making money in the first place. Isn't that ironic? Greed is our desire to make money. Your desire to make money is what's stopping you from making money. So you increase your risk, and what happens? You take another trade and you end up losing money, right? Because you over risked, or maybe from there you took a low quality C+ setup, maybe a D setup, and you end up losing more money because you increased your risk. And that usually leads to another emotional crash out, or you making even more mistakes. And this is how the cycle begins. And the thing is, you only have to go through one of these cycles to ruin months of progress. You could be perfectly trading according to your plan for 2 months, managing your emotions, and you have one day where this happens, where you have this crash out, everything's going wrong, and all of a sudden you increase your risk. Now you're losing money, and you're giving back months of profits, months of progress. And some traders even just blow their entire account. And this is just the unfortunate reality of most traders. This is what happens. And you need to avoid this at all costs. And ideally, you just decrease your risk when this happens, right? So the real cycle should actually be, you make a mistake, you have that emotional crash out. That's fine. Sometimes I get frustrated too. It's a part of trading. From there, you lower your risk, or you just step away in the first place. Let's say you don't step away. Lower your risk. And from there, you can rebuild your confidence, right? You take trades with smaller risk, right? Then let's say those end up being winners. Yeah, it's still on small risk, but you're rebuilding your confidence. And once you're back to like, okay, I'm feeling myself, I'm feeling good, right? I'm not emotionally unstable anymore. I'm feeling great. Maybe 1 to 2 days later, after you've rebuilt the confidence, you're able to re-raise your risk to where it was originally. And from there, even if a mistake happens, right? Maybe even if you get emotional, you have like a protocol ready where you're ensuring that you're not going to lose a lot of money in your account. You're protecting yourself, right? You have a protection protocol where you decrease your risk when you find yourself feeling doubt, or uncertainty or stress, high emotions or lack of confidence, any one of those things. So before I go over some key situations that I guarantee you have faced as a trader and show you how to actually apply this rule in practice in the moment, I want to talk about the risk management formula. And it blows my mind that people don't know how to calculate this. They don't know how to size their positions. And I'm going to show you by how much you should decrease your risk by if you are feeling doubt or uncertainty. So right off the bat, before we enter any single trade, our risk is predetermined. We don't go into a trade not knowing how much we're going to lose if the trade hits your stop loss. We go into the trade knowing that if it hits our stop at this specific price, I'm losing X amount. That risk is predetermined. As a result, you need to size your positions correctly. So if the trade does hit your stop, you're only losing your predetermined risk. And your sizing is like your share size or your lot size, right? And the formula for this is really, really simple. It's risk, your dollar risk, divided by entry price minus stop loss price, right? So let's say you on average risk $500 per trade. And let's say the entry price for that trade is $3, right? Let's say you take like a breakout opportunity, entry is at $3, stop loss is below the base, is at $2.90. Great. So if it hits your entry at $3, you get into the trade. And if the trade goes back down and hits your stop loss at $2.90, you exit and you get stopped out. Now, you need to buy an appropriate amount of shares to make sure that if it does hit your stop, you're only losing $500. And this is the reason why we use this formula. So you take the entry price, you put it here, stop loss price, you put it in here, and then $500, which is your risk, is divided by that. So $3 minus $2.90 is 10 cents. 500 divided by 10 cents is 5,000 shares. So if you get 5K shares at $3 and then it stops you out at $2.90, you're going to lose $500. It's very important that you do this calculation before any trade that you take. I have to include it in this video because it's crucial. You have to do it. It's not optional, right? And let's say you're starting to feel uncertainty. What you can do is you lower this risk amount from, let's say, from 500, and let's actually type it. Let's say from 500, you're feeling uncertain. You're not feeling good about your trading. You're like, you know what? I want to decrease my risk. I'm going to decrease it by half. So now it's $250. Great. These numbers don't change, but your risk changes. And as a result, your share size changes as well. So now you're getting less size for your positions, right? Your share size is decreased because your risk has decreased. And I recommend doing it maybe by half or by 60%. It depends, honestly, how you're feeling. This is more discretionary. It's up to you how much you want to decrease your risk by. But I recommend half if you're feeling really, really down on yourself and you're just not trading the way that you know how to trade and you're just feeling off, lower your risk by half, okay? Now let's talk about some key situations where this could be truly, truly applied. So let's kind of go over it here. So there's a bunch of situations. We'll start off going through kind of the first one here. So let's say you're up $1,000 on the day. You're feeling good. You see another quality setup. You want to make another 500 to 1,000 on the day, right? So let's say it's lunchtime. You're up $1,000, feeling great. You traded well. You see another really nice setup, and you're like, hey, I think I can make $1,500 to $2,000 today. I'm feeling good. Let's make some money, right? You're feeling pumped up. Then all of a sudden, you completely mess up that setup, and instead you end up losing $200. And now you're at $800 for the day, right? Let's say $200 is your predetermined risk. So you lost your predetermined risk. Everything's fine. But now you're like, I was up 1,000. Now I'm up only 800. Maybe that $1,000 is like a psychological level that you want to see your profits above 1,000. You're like, no, I need to get back up above 1,000. And what you do is you raise your risk. You end up over trading, and then you finish the day in the negative. So what went from a nice, solid $1,000 day, you take a trade, you lose your risk, you're only up 800 now, and you're like, no, I need to be up more than 1,000. You overtrade, you lose your confidence, you increase your risk, and as a result, you give back everything. I guarantee this has happened to you, and you need to avoid this, right? And general rule of thumb is always protect 70 to 80% of your profits in a trade, right? So if you're up 1,000, you need to at least finish the day up 700 to 800, okay? General rule of thumb. This is a great situation. So maybe when you're up 1,000 and you're like, okay, I'm good here, I'm feeling good, I want to make sure I finish above 1,000, lower your risk for the rest of the day. If you're feeling like you're good with your profits, right? Now, if you do see a really high quality trade that's like A plus, sure, use your regular risk. I'm not saying don't do that, but I'm saying lowering your risk could be a good solution for you to make sure you're not giving back too much. Next, let's say you take 3 really nice high quality setups and lose. You take 3 good setups that fit your plan, but they lose you money. Now you're starting to feel emotional and frustrated. You increase your risk, and next thing you know, you're down 5, 6, 7 R's, right? You don't want to do that, right? You don't want to do that. If you take 3 high quality trades in a row, you're following your plan, you're taking the right setups and they lose, that's fine. That's going to happen sometimes. The worst thing you could do from here is raise your risk to try to make back what you lost, right? If you are feeling a little bit uncertain and frustrated after 3 losses, lower your risk, rebuild confidence, and then raise your risk back up. Or if you have a 3-day losing streak, you're down 3 days in a row. Maybe it's your fault, maybe it isn't. Maybe it's a tough environment. Maybe there's other external factors in your life that's stopping you from trading to the best of your ability. It could be for any reason. If you have a 3-day losing streak, I don't care what the reason is, lower your risk. Hands down, lower your risk by 50 to 70%. Or it's a heavy news day and there's crazy things going on in the market. Markets are really volatile. The market might be changing, right? The environment might be changing. This happens a lot to a lot of new traders where they make a bit of money 3, 4, 5 months, and then the market kind of switches and they fail to adapt, right? Or maybe goes from a bullish market to a bearish market, or a bearish market to a sideways market, and traders fail to adapt. And the same strategies that they were making money on before, they're not making money on those strategies anymore. And next thing you know, they're feeling frustrated. They're feeling nothing is working. They increase their risk. They try to make their money back and they blow their entire account, right? If you're noticing that's a weird day in the market, heavy news day, the market is adapting, decrease your risk, find comfort in that market, start to develop confidence in that market. And once you're feeling good, increase your risk back to the normal amount. Or guys, honestly, maybe you're trading in a new location. Like I was traveling in Europe this past month. It was I was in the hotel rooms with a different monitor than I'm used to. The Wi-Fi was a little bit weird. Different location, different setting. I'm trading now in the afternoons versus the morning. That kind of affects you as a trader. I'm a creature of habit. I like consistency. I like having a structured day. And when I was trading a little bit in Europe, I traded a couple days per week, honestly, just for my students. It was weird. So what did I do? I decreased my risk until I felt comfortable enough to increase it back to the normal amount, considering my environment changed, okay? Hopefully this makes sense, guys. And the reason this is so important, guys, genuinely, most people think that you need new strategies, you need a new methodology, you need new indicators, you need much higher reward to risk to make more money. And that couldn't be farther from the truth. The easiest way, nothing is easy in trading. I'm saying the simplest way to make more money is to simply limit the amount that you lose. And the way that I came up with this number right here, 378,000, is this, right? There's 252 trading days per year, I believe, somewhere around there. I've been trading for 5 years. Call it give or take 1,200 trading days. It's a nice round number. If I'm able to have this mindset and this rule of lowering my risk when I'm in doubt, or just having that risk management mindset, like just living my life being fiscally conservative and being conservative with my trading, just having this overall mindset of worrying about my downside over my upside, if that can save me an extra $300 per day, I'm gonna make an extra $378,000 over 5 years. That's an extra $75K a year, guys, by doing nothing but adopting this mindset. It's the only thing I changed. Risk management mindset and having this rule. If this rule saves me $200 to $300 per day for the rest of my career, which I risk around $500 to trade, around there between $300 to $700, I have more of like a range. If this is able to save me $200 to $300 a day, and that might be even conservative, right? It might even save me way more money. I'm making an extra 75K per year just because of that. Not by learning new strategies or trying out different things, new indicators. No, just by having this mindset, I'm making more money, right? By the end of the week and the month, if you're just able to limit your losses on your losing trades, you're going to make more money, right? And no one talks about this. Everyone talks about exciting new stuff in your trading, new whatever strategies and indicators like I mentioned, but no one talks about this. And this is how I've saved so much money in my career, by just applying this rule and not getting so emotional and not increasing my risk and then losing all my money, right? When in doubt, lower your risk. I don't care, if you're not feeling good, frustrated, stressed, whatever. It could be because of reasons outside of your trading. Maybe you got into a fight with your spouse, or maybe someone upset you in your personal life. You're going into trading not feeling the best. Lower your risk, okay? Just trust me. Just do it and rebuild that confidence, and then re-raise your risk, okay? And yeah, make sure this is not your cycle, okay? So this is a nice little summary. Yeah, hopefully you understood the share sizing formula. And yeah, guys, use these situations, okay? When in doubt, lower your risk. Have that risk management mindset. This is what's made me a profitable trader. I haven't had a losing month in over 5 years. And that sounds crazy, but I'm happy to post my statements. I've done it many, many times on my channel and on my TikTok. I'm happy to be as transparent as possible. The reason I'm so consistent is because I have this mindset. All right, guys, that's it for the video. I hope you enjoyed. And if you need to help build your trading foundation, you need more help with risk management or your strategies or the way that I trade, I have a free 10+ hour course that is genuinely better than most paid courses on the internet. Seriously, any course you've ever taken, my free course will trump it. It's just significantly better. I know it is. So make sure you start watching it. It's in the description of this video, and it'll help build the foundation for your trading, and it'll teach you a lot more stuff. It'll expand about everything that I talked about today. So start the free course. Let me know what you think of it. Watch my other YouTube videos in conjunction with that education. And yeah, leave a comment, leave a like, subscribe to the channel if you found this valuable. I will see you guys in the next video. Thank you so much for watching, and hopefully you'll take this to heart, and hopefully within weeks you can actually apply this, and as a result, make more money. I'll see you guys in the next video. Thank you.